Revolut built an AI model that got 64.7% better at catching fraud, 16% better at predicting who'll default on credit, and 41% better at guessing what you'll buy next, by combining data your bank already had. It's called PRAGMA. And it's already live. PRAGMA is Revolut's proprietary AI foundation model, meaning it's not a bolt-on chatbot or a customer service gimmick. It's core infrastructure built to unify all of the customer interaction data a bank already collects and use it as a single, connected system instead of a dozen disconnected tools. Every tap, every transaction, every app interaction, every customer service message, historically, most banks process these in separate silos. PRAGMA's whole premise is unifying them so the AI has a complete behavioral picture of each customer instead of fragments. That unification is the actual innovation here, more than any single feature. A fraud model that only sees transactions is guessing. A fraud model that sees transactions plus login patterns plus device behavior plus customer service interactions is pattern matching against a much richer picture, and that's reflected directly in the results. Let's actually unpack what a 64.7% improvement in fraud detection means, because as a headline number it's easy to nod along without understanding the mechanism. Traditional fraud detection largely works off rule-based triggers, a transaction over a certain amount, a purchase in an unusual country, a rapid sequence of charges. Those rules catch obvious fraud, but they also generate a lot of false positives, which is why your card sometimes gets declined on a legitimate purchase for no reason you can see. An AI model unified across behavioral data can instead learn what's normal for you specifically, your typical spending rhythm, your typical login pattern, your typical device, and flag deviations from your pattern rather than deviations from a generic rule. That's almost certainly where a jump this large comes from, not one better rule, but a fundamentally more personalized baseline for what suspicious even means, applied per customer instead of per transaction type. Practically, for you, this means fewer false positive declines and faster catches on real fraud, but it also means your bank's AI is building a much more detailed behavioral profile of you than a rules-based system ever did. That's a real trade-off worth naming, not just a win. The 16% improvement in credit risk prediction is arguably the one with the biggest real-world consequence for the average person, because credit risk models don't just catch fraud, they decide who gets approved for a loan, a credit line, or a better interest rate, and at what terms. A model that's 16% better at predicting risk, if that improvement holds up broadly, means the bank can theoretically extend credit to more people who are actually low risk but would have been rejected by a cruder model, because it can see nuance a simple credit score and income check misses. That's the optimistic read. The other read, a model with a fuller behavioral picture might also flag something as risk correlated that has nothing to do with your actual creditworthiness, a spending pattern, an app usage habit, and there's limited visibility from the customer side into exactly what's driving that score. This is the general trade-off with any AI-driven credit model, and it's worth understanding as these systems become standard across banking, not just at Revolut. A 41% improvement in product recommendations sounds like the most harmless of the three stats, it's just, the app suggests things you might want, right? But this is actually the number worth paying the most attention to, because it's the clearest signal of how deeply these systems now understand individual financial behavior. Getting 41% better at recommending products means the model has gotten significantly better at predicting your financial needs before you've stated them, noticing that your spending pattern resembles people who are about to want a savings product, or a specific card upgrade, or an investment feature, and surfacing it at the right moment. That's a genuinely useful convenience when it works well. It's also, functionally, a very sophisticated behavioral prediction engine sitting inside your banking app. The line between helpful recommendation and AI-driven upsell optimized for the bank's revenue, not your benefit, is not something you can fully see from the customer side. Both things can be true at once. The recommendation can be genuinely relevant to you and optimized to benefit the bank's product mix. Worth remembering the next time your banking app suggests something at a suspiciously convenient moment. This isn't unique to Revolut. PRAGMA is simply one of the first banks to publish specific numbers, which makes it a useful case study for where the entire industry is heading. Every major bank and fintech is building toward this same kind of unified behavioral AI, because the fraud and risk benefits are too large to ignore competitively. The practical takeaway isn't, avoid AI-driven banks, the fraud protection genuinely benefits you. It's, understand that, your bank, now means, your bank's AI model, trained on a unified picture of your behavior, and that's a meaningfully different relationship than it was 5 years ago. Read what data your bank's privacy policy says it unifies. Notice when a recommendation lands suspiciously well-timed, and treat that as a signal of how much the model knows, not just a coincidence. Open your own banking app after this video and check whether it flagged or auto-approved anything recently that felt unusually well-timed. That's the PRAGMA-style AI at work, whether your bank is Revolut or not. Comment which bank you use, because I'm tracking which institutions are transparent about their AI models versus which ones stay quiet, and that comparison is coming in a future video. Subscribe if you want the receipts when it's ready.